Here we have the current stock market analysis for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find this educational material to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders will be able to find this information more easily on the platform. So we're going to start with a bit of a longer term view here. This is the 4-hour price chart. Each candle on this chart represents a 4-hour trading period. But we will be sort of zooming in here a bit so that we can see some of the price action that has gone on more recently. I just want us to sort of understand where we're trading at the moment and the severity of the price reversal that has happened right around the $21 mark. Because in this video, we're going to be identifying some very important price levels, some very important support and resistance levels, so that hopefully traders can establish some profitable trading strategies for this stock going forward. So as we can see here, this is the 4-hour time frame, and as we can see here, we're starting to see some fairly significant price declines as we head right into that $21 resistance zone that we have mentioned previously for this stock. I do want to zoom in a bit here so that we can see more closely some of this trading activity here, because we're coming into contact right with the upper edge of this prior stock price gap that occurred recently. This would have followed the quarterly earnings report from GameStop, and as we can see here, share prices are moving right into that zone again and starting to head lower once again. So this is a very important factor to be watching here, because as I said previously, if we don't move back into the price gap, there's no expectation for the price gap to be filled. If you're trading in that area, you would expect there to be some buy and sell orders that remained there and that have been posted, before the price gap was placed or printed. But as we can see here, share prices have failed to move back into that area, and this is really what is preventing that upside momentum from generating itself. So that on its own is a negative signal here, and it really does show that there is a tremendous amount of weakness that's currently governing this stock or controlling this stock. So, if we move on to the indicator reading here, this would be the hourly time frame that we're looking at the moment here. We can see that there is some negative momentum that's currently characterizing the relative strength index reading. It's not a massively downward sloping reading here, but it is negative, and we have to keep that in mind because as things currently stand, the share prices are moving right into this $21 resistance level and failing at that level. So to the downside, what we have to watch from here is this $19.31 support zone. Of course, this is a lower low relative to the 1988 support zone that was generated previously. This would have been the price low from the August 28 trading session. So, if we break below this 1931 level, the next level to the downside that we have to be watching for then is this $18.73 mark. So, overall, these are very significant price moves here, and it really does show that this movement above that 2501 level was indeed a false breakout. There really is no question about that. This is a harmonic pattern that unfolded right here, and the price movements that are expected to unfold with these harmonic patterns are drastic in nature, and the predictive ability of these harmonic patterns is extremely high. When I say extremely high, I'm talking like 85 to 88% type high, and that's based on historical backtesting data that goes back hundreds of years. We're not even just looking at the stock market when we make these types of analysis suggestions here. This is based on data that goes back hundreds of years. So these price patterns have unfolded in ways that are extremely predictable and extremely powerful, and it can be quite misleading because what they ultimately result in is a break of an upward resistance zone. There are bullish forms of this pattern as well, but it's not the W shape. It would be inverted, so it would be an M shape. The M shape would be the bullish pattern, and the W shape would be the bearish pattern. And these are very deceptive. It's sort of a W shape. You can almost call this like a Black Widow pattern, really, because It's sort of deceptive. I mean, you see share prices break to new highs here, but what is really coming is an avalanche. I mean, this is a drastic price movement lower, and these price patterns are predictive to an extremely high degree. I mean, these are extremely effective in predicting share price action. So the way things currently stand here, what we're looking at is another price failure coming in at $21 per share. The current price that we're trading at the moment is $20.08 per share. So we're still holding above that $20 mark a bit. But the outlook here is extremely worrisome as long as this $21 resistance zone remains intact. If we're not able to break above there, and it does need to happen relatively soon, because a lot of these orders that are parked in there in this area are either going to be closed manually or they're going to expire automatically after a certain period of time. After a certain time period goes by, these price gaps become less and less likely to be filled. So, it would have been a bullish event if we could have seen share prices break above here, break it into this $21 area, and then you sort of have a free ride, really, right around 23.20. But the longer this goes on, the longer this negative selling pressure maintains itself, the less likely it is that that price gap is going to matter in any way. I mean, it might not matter at all. So if enough time goes by, those orders are going to start to be filled. And then there would be no expectation for that price gap to influence share prices in the positive direction. So, as things currently stand, this really is the line in the sand to the top side. If we're not able to break above $21 per share, I don't see any way for this stock to generate some positive, strong momentum to the top side. And then what you're looking at here is a series of lower lows that is currently targeting this price zone right around $18.73. So, from there, we would have to go back much further in the share price history in order to find, levels of support. But from there, we would really be looking at roughly 1770 per share, and then from there, you're really looking at a test of right around the $10 level if all of these areas fail to support prices here. So just to summarize here, what you're really looking for at this point, if you're long this stock, would be a break above this $21 level, but it needs to happen here relatively soon because the more time that goes by, the less valid that price gap can be viewed to be holding. And then, just one final point here, the share price itself, in most of these time frames, we're still trading below the exponential moving averages. This is another factor that needs to be overcome here. We really do need to see share prices break above at least this 20-period exponential moving average so that at least you could start to have more of a sideways consolidated view of the current price action. So here's the stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.